Hello again, everybody. Paul Rogers, Renovation Real Estate. Hey, it's all about that house, right? It's all about that one house we're looking for. So today I'm back with you in the Brain Center here in the office. I just want to talk to you now about, we've talked about these home purchase improvement loans, as I like to call them, but they're actually a renovation loan by definition from lenders. You're going to hear all types of terminologies, but we'll call them the home purchase improvement loan. But for technicality, we're going to call them a renovation loan. Okay. So first off, what is a renovation loan, and really kind of how does it work? Well, you have to understand first off, a renovation loan is a loan where you can integrate the funds within your mortgage to do improvements on a piece of property that you want to buy. You can also, if you're looking to refinance, you can also do a renovation loan to refinance, do a refinance and make it a renovation loan as well to do improvements to your property also. We're basically going to talk about purchases here right now. Which also has some applicability if you're selling your house. But there's other programs I'm going to talk to you a little bit further on down the line here about what we do to help people that are selling their houses. We don't want to do another loan. We don't put that in place. But there are resources I'll talk to you about how to get those improvements done, typically without any money out of your pocket. Yep, seriously, without any money out of your pocket. That's I'm not BSing you there. So first off, basically this renovation loan, there's three types. There's FHA, right? There's a conventional portion, and then there's actually a VA renovation loan. So all these carry a little bit different nuances with them as far as the down payment goes. Like an FHA renovation loan is 3.5% down. Sometimes on conventionals you can do 5% down or maybe 10% down. You don't necessarily have to do 20% down at all. On VA, as a veteran myself, I'll tell you zero down. So there are some cool things out there about how to do these programs. So there's two types most certainly in the FHA realm that I want to discuss. One is called the 203K. That's an acronym, the 203K, because when you look at a regular FHA loan, it's referred to as the 203B, as in bad. And I never liked doing a 203B because I never felt like people were getting the most benefit for their money. So when we talk about the 203K, the 203K loan, I refer to that as the kind loan. In other words, we're going to put a little bit more money into some improvements into your house when you first get in. And again, I've mentioned this before in other videos. Why would you not want to do that and have your money, be able to borrow money at 5% or whatever the interest rates are, or put it on a credit card or pull it out of your savings or other places where you might have to get money. And you could be incurring, like on a credit card, you could be 29.99%, 25, 29%. There's just no advantage of doing it that way when you can have money that's really cheap. So the first two parts about an FHA 203K loan is one is called the Streamline loan. And that loan is anything less than $35,000 in repairs and no structural issues. So when we talk about that Streamline fits probably 60 to 70% of the houses out there. Why? You go into a house and what do you find? The 1960s, well, if you're looking in the 60s vintage, that's great, but you may find that burnt orange shag carpet or the green avocado appliances, those types of things. But you may walk into the house and, it needs to be painted, and maybe they had pets in there. It needs to be cleaned. Maybe it needs some new counters, some new cabinets. You're looking at it from the exterior of the house, and all of a sudden we look at it and go, oh, it needs a new roof too, right? The roof is leaking. So with that Streamline loan, if we keep those repairs under $35,000, we can do a Streamline loan. And so the benefit to you is this. Under the Streamline loan, there are two draws. In other words, how do you get your money to pay the contractor? The first draw is 50% up front. That's when the loan closes. 50% of those proceeds are released up front. And then when the work is all done, everybody's done, then the remaining of the 50% is released to you on completion of the work. So it's really simplistic. It's really easy to do. It probably covers 60 to 70% of the homes out there that I see for people. We walk into the house and again, maybe it's landscaping, maybe it's a deck, maybe it's a roof, maybe it's new windows, maybe it's a new furnace. These things can be accomplished really, really easily with the 203K Streamline loan. The other loan, and I kind of mentioned just a minute ago, as long as there's no structural issues. So the other part of the 203K is a full 203K, and basically what that entails, it's $35,000 and or greater. So I've been on projects where $350,000, $400,000 projects that have used FHA and also Fannie Mae, conventional types of renovation loans out there, home improvement or home purchase improvement loans, renovation loans, right? So they've used those types of loans for larger projects. So although if we get into a 203K Streamline, we think it's going to be under $35,000, and we run into any types of issues that are structural, and that could be dry rot, it could be issues in the foundation, it could be other structural types of issues, it will automatically revert to a full 203K. Now you may be thinking, oh geez, full 203K, what the heck, how am I going to do that? How much work is that? How much is involved? Nothing is really more involved for you, the client, than paperwork for the consultant to do. We're still going to identify all of the things. So when the inspections are done on the property, we identify first off what has to be done to the property to bring it up to minimal lendable standards. That's whether it's a 203K Streamline loan and or the full. And again, it could be 203K, it could be FHA, it could be Fannie Mae, it could be VA. All these, we still have to have the inspection done up front so that we can determine what has to be done. Okay. Now with your budget in mind, we look at what has to be done, and then we look about what you want to do. Okay. Now, if we have money left over, let's say we'll go out and look for you a house. You're qualified to $600,000, and we find a house that's $500,000. Okay, great. That means you got a $100,000 spread in there. So let's say we go in and we have the inspection done, and we find out, well, there's about $40,000 worth of things that have to be done. New roof has to be put on. You've got some broken windows; those need to be done. And the interior finished floors are just trash. So we got to do those. Those are have-to items. Now you've got $60,000. We're just using round figures here, $100,000. You got $60,000 left over. What do you want to do? Oh, well, we'd like some new kitchen cabinets. We'd like quartz countertops. We'd like a new deck on the back, and maybe repaint the entire interior of the house. Okay, great. So we take those two combinations, the have-tos and the want-tos, and then we put that, and so let's say all that amounts to $80,000. So now you have a purchase price of $580,000. That's called your total acquisition of the property, $580,000. That's what your loan amount's going to be based on. That's basically how the program works. Now, with the full 203K, there's a paperwork that's involved for the consultant. It's a 12-page document. It's got 35 line items on it, and each one of those line items in detail describe each part of the house, whether it's the roof, the gutters, the windows, the electrical, the plumbing, and each one of those line item categories also have subcategories within that. That is entirely up to the consultant, the FHA 203K Fannie Mae consultant, to do that paperwork for you. You'll have no extra paperwork, okay? Now, we put that in, that goes into the lender. Now, why are these really cool? What's the benefit of a 203K Fannie Mae VA renovation home purchase improvement loan, right? What's the benefit for you? All right, here's the first couple of things. I'm going to show you later on in some of these videos. I'm going to give you some numbers. But let's just hypothetically say we got $80,000 into this project. Your house, now the purchase price is $580,000. When the paperwork goes into the lender and the lender orders the appraisal is going to be based on the after improved value of the property. And what's that mean? That means, what's the property worth after all the work is done, and we haven't even started yet. We haven't done anything yet. But you're going to know what your after improved value appraisal is right off the bat. Why is that important to you? Because when you have 20% in equity in your house, you can refinance out of the FHA or conventional 5% or 10% down, whatever that terminology may be, or that loan may be structured at. You can refinance within 6 months to a year. If you have, what's called an 80-20 loan to value, you've got 20% in equity, we can refinance. You got good lenders that do this. We'll refinance you out of that. Therefore, also now saves you your mortgage insurance. So anytime you put less than 20% down on a piece of property, you're going to have mortgage insurance. What the heck's mortgage insurance? Mortgage insurance protects the lender in the event of default. And you default, that is their insurance policy, and it's called mortgage insurance, MI, mortgage insurance. Okay, could be PMI, could be MI, private mortgage insurance, but it's a certain percentage of the loan, and sometimes you get loans that are $500,000, $600,000, $700,000. That'd be $400 or $500 a month in MI that you're paying until you get to the 80/20. Well, by doing a renovation portion of your house, you're going to achieve that 80/20 a lot faster. I have seen over 30 years in the business, I've seen houses after 6 months or as soon as the appraisal is done and they haven't even done work, they've had tons of equity, more than 20% equity. I've seen houses 30, 40% equity, and they haven't even started yet. So they knew once they went in and started the project and got it finished within 6 months to a year, depends on the lender, but within that period of time, they were able to refinance out of that loan, sometimes a lesser interest rate. Why would you refinance to a higher interest rate? Think about this. You may think about that, right? Why would you finance to a higher interest rate? Well, let's say you got into this situation and the interest rates were maybe a half a point more. Okay, you think, why would I want to refinance out of that? My question to you, why wouldn't you want to refinance out of that? Simple reason being, rates are going to go down one day, but if you have an 80/20 or greater LTV, more than 20% equity, that's $400 or $500 a month in your MI that you're going to get rid of. So if you did this balancing act, you talked to your lender and said, well, let's kind of look at the numbers. Would it make sense for me to refi, even if I had to pay a quarter, maybe a half a point more to refi out of this because I have my 80/20 LTV or greater? Or do I stick with it for a while and still have that MI at $400 or $500 a month? Lender may look at those numbers and go, you know what? If we refied you out of this, it's a half a point higher than what you're paying right now, although we're going to save you $300 a month. Everything included. You'd be like, well, that's not very difficult to make that decision, right? So it isn't always, sometimes the numbers, you really kind of got to have a professional person like myself really just kind of help walk you through this, show you what these numbers are and how they work. So I'm going to talk to you more. We're going to talk a little bit more on renovation, home improvement, or home purchase equity improvement loans, these renovation loans. So I'm going to be right back with you. Stay tuned. If you like what you got and you've been hearing so far from us, hit the subscribe button. We'd love to have you on board. We got a whole lot more content coming, and we're glad to have you. Thank you very much for listening to me, and we'll talk to you soon.